All right. Good evening, friends. I am Swarupa Bazalwar, moderator for this webinar, and thank you for being patient and waiting for the session to start. My sincere apologies for the network issue on my end, but here we start. We are delighted to welcome you all in this webinar being organized by CCLEA and NPO Committee of ICAI. It is my pleasure to be the moderator in Know Your Law series. This is the 56th session in this series, wherein we are having a webinar on RERA overview and key provisions. This obviously being organized by the Committee of Commercial Laws, Economic Advisory and NPO Cooperative of ICAI. In a short while, we should be starting this webinar with our eminent speaker. But before that, I would just like to take a few minutes of yours to let you know about the committee, what it is doing for us, the members. This committee is focused to encourage chartered accountants to shape strategy and policy that unlocks economic, financial, and social value while combining analytical foresight with commercial acumen. One of the core areas of this committee is to serve the multifunctional task of analysis, knowledge, dissemination, inputs to regulators on policy formulation, to develop and publish technical guidance, background materials, etc., and to create awareness for professionals, opportunities for chartered accountants in the commercial law, economic advisory, and NPO cooperatives. Our eminent speaker will talk about RERA overview and the key provisions in this webinar, and we hope that the same shall be useful to all your members. So with this preface, I welcome you all once again to this very valuable session with respect to RERA. And I would like to welcome our speaker for the session, C.A. Vaibhav Modi, to the forum. Welcome, sir. Sir, you're not audible actually.
Thank you. Thank you, ma'am.
Yes. So
can you hear me?
Yeah. Now I'm able to hear you. Since President, Chairman and Vice Chairman for the committee are yet to join us, I believe that we can start with the session first, and then they can join us virtually later. So I would like to introduce our eminent speaker very quickly, very shortly, because I wouldn't want to take much of his time or his deliberation and all these things. So I would introduce our speaker, C.A. Vaibhav Modi, in a brief manner. It's my pleasure to introduce the distinguished professional with a remarkable track record in the fields of taxation, finance, and RERA. As a certified public accountant in both Ireland and Australia, as well as certified blockchain expert from IIT Kanpur, Vaibhav Modi brings over 15 years of experience to the table. Vaibhav's commitment to the profession extends beyond his professional accomplishments. He has actively participated in the PCMC ICA branch elections, advocating for the betterment of young chartered accountants. Furthermore, under his guidance, the Vikasa Pimpri-Chinchwad branch of WIRC of ICAI received the highly commendable award for the year 2023 and the Best Vikasa Award at ICAI Central level for the year 23-24. Currently serving as the Vice Chairman of the Pimpri-Chinchwad branch of WIRC of ICAI for the second consecutive year, Vaibhav continues to make valuable contributions to the professional as well as civic organizations he is involved with. With this brief introduction, I welcome you to this virtual forum for the very valuable session on RERA, sir. And I also request you to take forward the proceedings as well.
Yes. Thank you, Swarupa. Good evening, esteemed participants and distinguished guests. I thank Central Council members and Chairman as well, our CA Chicle sir, and Vice Chairman Prakash Sharma sir, for giving me opportunity to deliver today's session. It's a pleasure to be here today among such esteemed colleagues for the insightful webinar on RERA overview and key provisions. RERA, we tell it as a RERA, but it's actually a Real Estate Regulation and Development Act 2016. So it's actually a RERA. Stand as a pivotal legislation in the realm of real estate, aiming to bring transparency, efficiency, and accountability. As we know that this is a significant statute which has been able to regulate the unorganized sector. We will explore its key provisions, implication, and broader impact it has on the real estate landscape. Throughout our session, we'll navigate through various aspects of the RERA, shedding lights on its importance, challenges, and opportunity it presents to us, how we can ourselves practice in the RERA. I'm honored to be your guide in this journey. Thank you. And let's start with our presentation. I'll share the PPT for this. So we'll start with understanding what is basically a RERA is. RERA came in 2016, enacted. It aims to do two things. First is to protect the home buyers, protect the interest of the home buyers. First goal of the RERA is to protect the interest of the home buyers. And second, by protecting, it wants to also enhance the real estate investment, boost the real estate sector by organizing it. We all know that whichever the sector which is being organized by the authorities, we have seen the example, insurance, banking, and all this have now increased. SEBI, we can say, those sectors have seen a very bright future. So likewise, same we are seeing, we'll see, and we are already witnessing it. The real estate sector is growing like anything right now. So it came into the force from 1st May of 2017. RERA basically enacted by the central government, but to be implementation to be done by all the states. So central government has enacted the act, and every state has brought rules and regulation to regulate the real estate sector in their own states. We can see that basic requirement of this RERA was to regulate the sector, which was highly unregulated. It has also to bring the transparency and protect the customers. Short journey of the RERA. It started in 2013 by a bill which was presented by Ministry of Housing. Then it came into the standing committee 2014. Revised bill was introduced in Lok Sabha after standing committee recommendation 2015. Bill was passed in both houses in 2016, and President also gave assent in the 2016. Some sections came into the force on 1st May of 2016 itself. It was 69 sections and 92 sections. Formation of the rules by state government started on 31st of October 2016. It was in the act itself that within 12 months, each state has to implement the act in their own state. In many states, we have seen that it has started on 1st May of 2017. And by bringing the rules, regulations, some have started online, some have started offline, and some have started mixed way. Then tribunal was established in 2017 itself, April, and we have seen that section after that within 19 days, it was given a time for the existing builders to register in a RERA, those projects which are ongoing. This was a law journey. So how it was evolved and what was the purpose of the RERA? So we have seen that 2013 and 2016 was the major part of the amendment came into this government initiative for regulating the sector and bringing the consumer confidence. Purpose was clear. It has to bring insurance transparency. So what were the issues we have to understand first, and how that RERA has brought that transparency into the sector. And we'll understand that challenges and what were the rationale behind the RERA. Earlier, before RERA, we can say that promoter used to commit certain deadlines, timeline for the projects and not able to deliver that project in the time. The first major hurdle, the first major problem of the every customer was the project for which the amount has been taken by the promoter, but has not received its uh, delivered the project to the customers. And it has taken many projects. We have seen that it has taken more than 5 years after the deadline was given in that. Second thing, agreement. Now we can see in every state the agreement model draft has been defined. The promoter has to use that model draft. They cannot add any other clause such as irrevocable consents are given for changing the plan, irrevocable consents are given for adding any kind of removing any kind of amenities from the project. This kind of things were happening, and to regulate this thing, to give customer a confidence that commitment which is being given by the promoter will be delivered and RERA will be there between the consumer and promoter to see that those commitment has been fulfilled or not. So RERA, in short, is a regulatory authority which is regulating each and every aspect of the real estate, which is standardizing each and every aspect of the real estate. Standardization, we can say in the terms of area also. So, RERA Act itself has defined carpet area. There was earlier there was used to we can see that many kind of areas were there while selling. Some was saying it as a built-up area, some super built-up area, more kind of different version of these areas were there, and consumer were not able to understand how this kind of areas have came, and due to this kind of ambiguity, promoter used to manipulate areas and take an undue advantage out of this. So the standardization of each and every aspect has been. Then we will see it, everything into this session. What kind of standardization is there? So these were the problem. These were the reason. Basic reason was a delayed possession is a core. We can say a commitment, basic commitment of the RERA that project will not be delayed. Second basic commitment from the RERA is that will bring the financial discipline in the real estate sector by regulating it, by providing provision for that, giving a provision for that. And we are playing a major role into this financial discipline aspect. So why the financial discipline was there? Was came into the RERA. Financial discipline has helped that diversion of funds should not happen. Promoter, let us take an example. He's going to build 100 houses. Earlier, before the RERA, he used to take the money from the consumer. He used to show that this is a land where we are going to develop and we will get this kind of this is houses. These are the tentative plans. These are everything, brochures and everything was there, and those money were taken, and then those money were used to transfer to some other project, to buying some other land. The money was of customer, but land was purchased by the promoter and the money was siphoned off from the project itself. And then the project gets delay and everything came up into this story. So this kind of financial discipline is also there. This kind of manipulation and has been reduced. I can say not 100% stop, but yeah, day by day it will come into the picture also. That we will see that day also, where this kind of manipulation or what we can say is diversion of fund and all this thing will 100% stop. But RERA is a major pivotal into this. What were the salient features of the RERA? RERA is just not an act. It has given the procedures. It has given the authorities to various stakeholders. We can see first we have to start any project promoter who has to sell any unit has to get registered with the RERA. So registration window is also being given by the RERA only, where the project has to be listed and then only you can start selling that unit. Again, agent is also brought into this ambit of registration and doing RERA compliances. He also cannot facilitate the sale if certain terms and conditions are not followed by the promoter or himself also. That is also very good feature of this RERA, that not only project but also agent is also into this. Now, second aspect is the compulsory public disclosure of the project detail. Earlier, we saw that promoter used to not disclose completely. His advertisement or brochure, we can say, were given but not authenticated by anyone or not regulated by anyone. So now everything comes in a public disclosure. So everything you have to upload on the public website, and then whatever the commitment is given in that public disclosure, that only any buyer can access that information, and then he can purchase or do investment into that project. So that's good point of this salient feature of this RERA. We can say that they have brought a public disclosure in for the project, so public can access that information easily, most of the information easily. Then financial discipline we have talked. In financial discipline, one more point which is there is an escrow accounts. We can say escrow account rather than escrow account. We can say a separate designated bank account. Some are using terminology escrow account. It's a separate designated bank account for the project only. Many states have provided the guidelines how that account should be and how it shall be operated. There are three accounts which should be there. In some states have not provided the guidelines, but we can take it as a standardized guidelines, as three accounts should be there for the project, individual project. First account should be 100%, which is collection account where the money is being taken by the customers. That should be automatically linked with 70% and 30% account. The money which comes in 100% account will be automatically distributed in 70 and 30. You don't need any checkbook or NEFT, nothing has to be. Then that 70% account is locked. Then it has to be, whenever you want to withdraw, you have to do certain compliances for the withdrawal of 70%. 30% is promoter's money. He can invest anywhere. Likewise, we can say that account is operated. And then final requirement is audit requirement, which is to be done by, again, chartered accountant. So chartered accountant has a dual role, we can say. Is the first is during the withdrawal of the money from the project in a periodical basis, and then after, at the end of the financial year, you have the auditor role also. So we have got this opportunity from the RERA itself. Now, applicability of RERA. It's all India coverage. Every state is covered by the RERA. Applicable to all the projects, residential, commercial, plotted development, everything is covered under this. And it's an establishment of state level real estate. So I have already explained you what is the state and central role into this, central government and state government role. The authority is being established by the state government. Act is brought by the central government. So we see that state-wise registration quantum is the small insight of the number of projects registered in the various states. So highest is the Maharashtra state, then we have Gujarat, and Tamil Nadu is the highest. These are the various states by registration. We have already talked what are the benefits of the RERA, and you will also come to know what are the benefits of the RERA. One important aspect of these benefit is professionalism. Everything now, it is not like anyone comes into the sector, build a project, and become a builder of that. It is not that easy piece of cake for any promoter. Then whenever you are entering into the real estate sector and RERA registered project, you have to give a professionalism touch to that project. So that in past few years, we have seen that many promoters have not continued with the profession, and some have come with the real good professionalism into the sector also. So that's a very important aspect of this. Now, what are the functions and responsibilities under the RERA? We have already seen that project registration, promoter responsibilities, there are two important parties into this. First is promoter and second is allottee. These are the two most important parties into RERA. They have, RERA has defined what are the promoters' responsibility. First, promoter's responsibility is the project to be registered. Second is all information to be disclosed on the website. Then we have to adhere to the plan. We'll see that section also, what it is saying. Then it has to be a timely completion, possession to be there on time, financial discipline, and bank account management. There are other responsibilities also. These are the short PFC. Then what are the allottees' rights and duties? Allottees has the right to access the project information. Whoever the allottee is there, he has the right to access. Even if some information is not on the website, he can ask from the promoter those information. The rights has been given in the RERA itself. Then his duty is to do payment on time. We have seen many cases where many judgments in many states where the allottees have not done payment on time and the judgment have come hours for them because it's their basic responsibility that whatever the agreement you have entered and whatever the payment schedule has been there, you have to follow that payment schedule, or we'll see interest and other actions against allottees also. So this is a most important allottee's duty. We have seen allottee duty also post completion project. Allottee has to come forward for the society formation. They cannot say, I will not take a handover, I will not do all this thing, I will not do conveyance. These are the problems, these are the things. That is also a responsibility cast on the allottees that they have to come forward for the society formation and conveyance. So what are the overall impact we after seeing all this thing, we see that there is an increase in the governance level. So now earlier promoter used to not fear anyone. So earlier remedy was only to, there were laws and acts and provision were there before RERA also. Many provision, many acts, many things were there. But there was no regulatory authority who were regulating. Because of regulatory authority, the governance has been improved and now the promoter has started disciplining themselves, fearing that authority and doing following all the norms of the RERA. So this we can say is indirectly an impact on the real estate sector that our governance has been increased. There is an improvement in the governance. The compliance and accountability, every promoter has to do compliances. And now states are issuing the penalties also for non-compliances, and they are accountable. Whatever they are disclosing or whatever they are communicating with the consumer on in any way, they are responsible for that commitment also. So positive market perception. There is a positive market perception in this. Now every customer, I myself witnessing that customers market perception has increased. Whenever the customer is now visiting any promoter, he is not questioning that many aspect of the project. He's not that much feared about investing his money. He's now, we have seen that yesterday news only that DLF is sold within 3 days, 5,000 crore rupees has collected 800 units has sold within 3 days. So how this is happening in Gurgaon, we have seen many kind of such news is there. In fact, in other cities also, such kind of news are there. That market has been got that positive perception that people are not fearing too much and started investing, and the investment has been increased into the real estate. So last aspect is also covered, that increased investment and consumer trust. Now, what is the regulatory framework and dispute resolution? How the regulatory is working into mechanism. So state level RERA and Central Advisory Council is there. So state level authority is also there. state level tribunal is also formed for appeals and dispute resolution. In some states, we have seen that a conciliation forum is also there to consult the matter before the RERA, going to directly into the RERA also. Conciliation forum is also there. In some states, we have seen that. The many kind of this kind of dispute resolution mechanism or is there due to RERA. It has come, and people has got that power to regularize, provide this kind of resolution under the law. Earlier, there was no such kind of framework or dispute resolution. So this is most important aspect of this RERA. RERA's most important is only authority. The authority is there. That's why regulation has increased, and we have seen that investment is also increased. Now, as we have covered overview of the RERA, now we'll cover the aspect of what are the key provisions, what are the important provisions. As a chartered accountant, I should know in the RERA. These are the important provisions which I have shortlisted in the RERA, and you all should know it. Section 3, first and foremost important section is Section 3. What it says? It's an applicability of registration, or we can say a prior registration. We have to take a prior registration before selling anything. So Section 3 of the Real Estate Act states that the promoter cannot advertise. He cannot advertise, market, book, sell, or offer for sale, or invite people to purchase any real estate project without registering it with the Real Estate Regulatory Authority. Please be careful. Please read it careful. What it states, Section 3 says कि promoter advertise नहीं कर सकता है, market भी नहीं कर सकता है, book भी नहीं कर सकता है, sell भी नहीं कर सकता है, offer for sell भी नहीं कर सकता है, और invite भी नहीं कर सकता है लोगों को अगर प्रोजेक्ट रजिस्टर नहीं है रेरा में. प्रोजेक्ट रजिस्ट्रेशन इज अ प्री कंडीशन. Project registration is a precondition for selling the project. If you don't want to sell, we will see it in a promoter definition also. If you don't want to sell anything, you don't want to market anything, you're building project for yourself, then you don't need to register the project. But if you want to sell, or if you want to advertise or market or do anything, then you have to register with the RERA. This is first and foremost important requirement, where a chartered accountant also can practice and help the promoter with the registration formalities and procedures. This applies to all the projects, real estate project in planning area. So it may be a development, urban development area, municipal area, industrial development. The areas which are, if it is in a planning area, then you have to register with the RERA. Second important aspect, where it talks about which are the project exempted from the registration. Project which are exempted from the registration as per the Section 3.2. It says that project where land area is less than 500 square meter. अगर आपका 500 स्क्वायर मीटर और 8 यूनिट से कम है, तो आपको इंक्लूडिंग ऑल फेजेस, ये वर्ड आप ध्यान रखना, इंक्लूडिंग ऑल फेजेस. मैं आपको एक्सप्लेन करूँ व्हाट इट इज. तो आपका 500 या 8 यूनिट से कम है, तो you don't need to register. Obviously, this criteria is different for all the states. Act has provided this criteria, also given the power for the state to reduce it further if they want to reduce it and increase the compliances also. So project with land area less than 500 square meter or apartment are exempted from the registration. Now, including all phases. What this means? So sometimes the project happens project happens to be sometime a promoter take a part sanction. In part sanction, it take a registration sanction for 8 units only. So if it is in 8 units, you don't need to register. But he comes with more units after that. So once he crosses that limit, he needs to register. That's called all phases. So including all phases we will see the meaning, what it is, real. But this line, which is very hidden in the act, including all phases, needs to be understood by each promoter, each chartered accountant before advising the client whether you are exempted or not exempted from the registration. Then project with a pre-RERA completion certificate, the Act has provided condition or exemption, we can say, where before coming the Act, if you have received the completion certificate, you don't need to register with the RERA. Some states have given additional exemptions to the promoter, that if you have received the completion certificate after the RERA also, you don't need to register if you have not sold anything. If you have not sold anything before completion. So some state have provided that condition also, exemption also additional. But in this act, it is only related to before coming the act into the force. If you have received the completion certificate, you don't need to register with it. Now, what is third part of exemption is when there is only a redevelopment. So building has to be demolished. There are existing people who are staying into that and again reconstructed that, redevelop that project. And in that redevelopment, there are no new sales. This is an important aspect. If in that redevelopment project, there are no new sales, you are not liable to register the project. If I am the allottee and if I am the member of that housing society and that housing society's project is redeveloping it, and we are the member and we are only receiving, developer is not, means there is no additional sale by the developer also, or even if housing society himself is developing, they are not bringing any new unit for selling it to the third party, then they are not required to register with the RERA. These are the important exemption criteria which everyone has to keep in mind before advising for registration or not registration. Now we'll come for the next section, section 4. We have understood the section 3 वाला criteria. Section 3 में और भी थोड़ा सा था, which is 90 days, but now it is not relevant because we have already 7-8 years past that this. So I have not talked about that. I have not taken so much time on discussing that aspect. Now we'll come on to section 4. Section 4 requires the promoter to provide it's a disclosure. So whatever if you are liable to register the project, you need to comply with the section 4. Section 4 say what needs to be disclosed to the public during the registration. What are the information to be uploaded while doing a registration? This is the act provided. Every state has their rules and they have expanded also and reduced also. As per the act, it is required that everyone has to give some information which is like concise information of their enterprises ka who PAN and all this information, where the enterprise is going to develop or want to register with the RERA, they want to give their own information on that. What past projects they have done in 5 years, their enterprises, other projects, they have to give that information. They have to upload authenticated copies of approvals and plans. So whatever the copies authenticated received from the authorities, that has to be uploaded on the RERA website along with the plans. Then they have to provide details about the facilities, amenities they are going to provide, location where it is, whatever the location is there, project is coming on that, has to be very specific. Then perform of essential documents, certain documents like agreement to sale, conveyance deed, allotment letter, this pro forma has to be uploaded on the website. And information about apartments, individual apartments, garages has to be uploaded. So whatever the individual apartment you are bringing in that project, if I am bringing 100 units into that project, I have to mention their information while registering the project. Then we have to give some information about who are the agents, contractors, chartered accountants, engineers who are involved into, who are the project related architect and all this thing, information has to be given on the public domain. Now, why I have added section 11 here? Because section 4 says about what information to be collected from the promoter while registering the project. And section 11 says what are information to be uploaded quarterly after the registration. So after you have registered the project, once you have registered the project, so section 11 comes in the play. And section 11 says what information to be uploaded, what kind of uh, data to be updated on what basis. So we will see that section 11 says that promoter must furnish details of granted registration. Quarterly update should be given. Quarterly update should be given on book units and garages. So whatever the units have been booked on quarterly basis, we have to give that information. What are the status of the approvals? So as the project is long, it takes 2 years also, it takes 5 years also, it takes 10 years also. There are various approvals needs to be taken at various stages of the construction. So all these approvals, whatever there, if you have revised the plan, if you have revised the commencement, all this approval has to be updated on quarterly basis on the and this information is asked under section 11. So that is very important. Then next it's project updates. What are the project updates means what? Okay, where is the construction stage comes in these 3 months. So whatever last update I have done after the registration quarterly updates, in next quarter update I have to give that what are the stages of completion I have done, how much cost is being incurred, how much units have been booked. This information has to be given under section 11. So section 11 is very important for us to understand. Section 4 and 11 comes together in jointly in a play. That's why I've added section 11 here only. And any other information if regulatory authority has specified, then you have to give that information. Like we can say in some states, whenever the project or promoter is taking any loan on the project, and he has taken a project a loan on that project, he has to upload those information under section 11 on quarterly basis. So that's kind of information has to be updated, and we have to adhere with the section 11 clauses into this. Now, after registering the project, after understanding the registration provision in the RERA and quarterly updates, in between that, we have to understand under section 4 only, 4.2 LD, that this is most important section for a chartered accountant to understand, that it provides financial discipline aspects of the RERA provisions, RERA Act. This is the very much important aspect section of the RERA for us and for promoter also, because we see that promoters most of the time is concerned with money only. So that has to be disciplined, and this provision has been brought under section 4.2 LD. What is 4.2 LD? 4.2 LD talks about two things. First is a withdrawal, how it can be withdrawn, and second, audit. So we have to understand two parts. So I've kept two parts separate. First is related to updations. We'll see that. So section 4.2 LD states that 70% of the amounts realized for the real estate project from the allottees. So in this thing, first is real estate project, second is from the allottees. So any money I am taking for the real estate project from the allottees, I have to deposit. Other than that, I don't have to follow this section. Suppose if I'm investing my own money, I'm not worried about section 4.2 LD. Promoter is investing his own money. You don't have to worry about. Promoter is bringing creditors' money, or promoter is bringing investors' money. Investor also is not covered under 4 to LD. Promoter is bringing loan money from the banks. They don't have to comply with 70% wala aspect. The 70% wala aspects is only comes when any promoter is taking money from the allottees for the real estate project. So this is also very important to understand what is real estate project under the RERA. We'll see that in time. Now from time to time. So I'll say that 70% of the amount realized for the real estate project from the allottees from time to time shall be deposited into the separate account to be maintained in scheduled bank only. Here we'll stop. What it is saying from time to time. So I came with one important discussion of this RERA only. I have seen that time to time, what is time to time? There is no, in fact, it should be very specific that you should deposit immediately. So here it is saying only time to time. So whether I have collected amount right now from the allottees and I can deposit after 2 months. So this kind of opinion will be asked from you as a chartered accountant. You have to answer those people with that aspect also. Only in to provide you help, small help, I'll say that in Kerala, there on the website, it has only given. Nowhere I've seen that state has specified when it should be deposited. In Kerala, it has been specifically given and it should be done within 15 days. So once I have collected the money, I have to deposit within 15 days 70% into this account, separate account. Now, some states have come with the bank wala circular, how the bank should be operated and how should I be, and that it has been given that clarity, how it should go 100% wala account, 70. Nowhere in the act it has been given, but some states have come with the clarification. So this is the problem that from time to time how it should be interpreted, because Kerala has come with 15 days wala criteria. This kind of problem is there. So you have to advise to your promoter what it shall be. Now shall be deposited in separate account to be maintained in scheduled bank. So it has to be separate account. You cannot say that I've opened this account, I'm using it for this project, again I'm using for another project, I'm using for other project. It is not possible. It is not permissible. 70% wala account has to be separate account only. Your common account cannot be used as a separate account. Now to cover the cost of construction and land cost. So 70% account can only be used for that purpose. Means what purpose? To cover the cost of construction and land cost, no other cost. So if it is a cost of construction and if it is a land cost, you can use that 70% wala money. So this has to be certified by the chartered accountant. You have to remember that very carefully. 70% amount has to be only for the cost of construction and land cost. No other cost is allowed. Now, provided that amount, promoter shall withdraw the amount. Now, to cover the cost of project in proportion to the percentage of the completion of the project. So, proviso is given. Proviso says that promoter shall withdraw the amounts from the separate account to cover the cost of the project in proportion to the percentage of completion of the project. So you have to certify that this amount is allowed in proportion to the percentage of the completion of the project. Now, second, further going in that provision only, this is a provision only. More provision is there. Provided further that the amounts from the separate account shall be withdrawn by the promoter after it is certified by an engineer, an architect, and a chartered accountant. So see the sequence also. It has to follow in that way only. First, it has to be certified by an engineer. Second, it has to be certified by an architect. Those two certificates should come to the chartered accountant, and chartered accountant should then certify final what withdrawal is allowed in proportion to the percentage of the completion of the project. Now, let us understand what engineers, architect role is and what chartered accountant role is in these three and what kind of certificate they are asking. What certificates is there? Engineer's role Engineer role is to certify the estimated cost of construction which will be required to complete the project. So all engineers has to certify that how much cost will be required to complete this project. If you read that engineer certificate, how he has to certify? He has to look into the drawings. He has to look into the drawings and then he has to work out how much steel will be required, how much cement will be required. He has to do that all that maths and then certify how much cost will be required to complete the project. So if engineer certified certain amounts for this kind of project, 100 unit wala project, it will require 10 crore rupees. So 10 crore certified by the engineer with some working with him based on the drawings. He has to certify, and that estimated he has to certify additional one more item into that. What is the another aspect we has to certify into engineer by the engineer? After estimating the cost of construction which is required, he has to certify one more aspect is how much cost he feels estimate has actually been incurred after visiting the site. So he has to do two things. First, he has to take the drawings. He has to certify the estimate cost. Then second, he has to go to the site, see the project, how much it is completed, how much items will be required, materials will be required, and based on that, he will work out the cost, what cost has been incurred in the project. So two figure, first is estimated 10 crores, and second is figure is कि saying इतना इतना काम हुआ है. I think is 2 crore का काम हो गया. In figure terms only he has to certify. He has to keep those working before certifying those figures. And after now we see what 10 crores is total required, 2 crores is incurred as per the engineers. Means what? 20% of the project is completed. Remember, if you are a chartered accountant, when these two certificates are coming to you, and if you are not able to interpret it, you cannot certify your Form 3. You cannot come into proper figure of the Form 3. Now we'll go for second wala part, which is architect part. Architect role is to see the website, visit the website, and say, okay, plinth work is done is this much, excavation is done this much, slabs this much. It is all standardized. Everything is standardized by the state. Each state has standardized what architect has to certify. He'll say, yeah, this work is done by 80%, 100%, 20%, 10%. Then lift has been installed, external plaster has been done, internal plaster has been done. All these things is certified by an architect on the given period. All the various aspects of the constructions. Can you see? Yeah, light was some click was there at my end. So we are on the architect part. Architect part says that after visiting the site is certifying certain aspect of the constructions and deriving at conclusion that overall the project has been completed 25%, 15%, or whatever the percentage is coming in. So one engineer has certified some percentage, then architect has certified some percentage. Now coming to the chartered accountant. Chartered accountant also is being given standard form for all the projects by the states. Chartered accountant, after collecting those two certificates, he has to go into the books. He has to take engineer's estimation, 10 crores, then go into the books and see actual expenses has been incurred over. How many bills have been there? How much expenses promoter has booked in the books of accounts. And he assumes he's come as a 4 crore rupees. So now maths will be there. So engineer coming at 20%, architect coming at 15%, and CA coming at 14%. Then you have to be a little bit very careful why your figures are more and why you are allowing more withdrawal compared to other 12 people. Whichever is lower, you have to consider as a withdrawal amount. So if engineer certify only 2 crore, your 4 crore is of no use. You have to show it as a 4 crore. But when calculating withdrawal, it will be a minimum of engineer or your figure. So 2 crore will be allowed by you for the withdrawal purpose. So this way, each one has been given as a role. We are ourselves is a authority into this. We are ourselves is a part of an authority of this. Engineer is also an authority. CA is also an authority, and architect is also authority only. We are internally managing this project. Now coming to the next aspect, audit aspect of the project. We have completed the withdrawal aspect or quarterly compliance aspect for the section 4 LD, 2 LD. Now we are coming at the audit aspect of this. What audit has been given? A proviso is given there. Provided also that the promoter shall get his accounts audited within 6 months after the end of every financial year by a chartered accountant. So it has to be done by a chartered accountant only, no one else. The chartered accountant has two roles. First, he has to certify the withdrawal. Second, he has to do the audit and shall produce a statement of accounts duly certified and signed by such chartered accountant, and it shall be verified during the audit that the amount collected for the particular project have been utilized for that project and the withdrawal has been in accordance with the proportion of the to the percentage of the completion of the project. So he has to check all the withdrawals from the account. Suppose I withdraw money from on 15th of April, and he has to check that withdrawal is being in compliance with the process which is being defined above. So he has to check all the certificates as an auditor, and each withdrawal has to be checked that certificate which has provided a withdrawal of, suppose for the first quarter it has provided a withdrawal of 50 lakhs and the promoter has withdrawn 70 lakhs, then he has to qualify. So auditor role is there. It's a balance, checks and balance given by the RERA itself. Now coming to that chartered accountant roles, it has to be independent. Many clarification has been received into this. A same chartered accountant who is certifying withdrawal cannot be a chartered accountant for doing the audit of the work. He cannot do the audit. He cannot check self check his own withdrawal. It has to be very independently done. So two chartered accountants will be required who are independent. These two chartered accountants have nothing to do with whether they are a statutory auditor of that firm or tax auditor or whatever. They are connected with the promoter. They can be independent also, or they can statutory auditor himself can do also for this work. But these two has to be independent from each other. So certifying above withdrawal certificate has to be independent than auditor certificate. Now explanation will be given for the schedule bank, which we are saying schedule bank has to be there. Covering these two important aspects, we are coming for the next important aspect is section 14. Once you have registered the project, you are doing regular updation of the project. Now next important part is section 40. What it says, Section 14 says about changes in the plan, sanction plan. So if there is any changes in the sanction plan, you have to follow this section 14. So section 14 of the Act mandates that promoter must develop the project as per the approved plans and specification. So he has to develop the project as per the approved plans. He cannot do anything. If there is any changes to these plans, he has to take a prior consent from the buyers, allottees. If there is any changes in the plans, he has to take prior consent from the buyers. Minor alteration, there are two alteration. Minor alteration means alteration which is going to affect only that allottee. It's not going to change whole project. If there is any minor alteration, then you need to take a consent from that person, that buyer. You don't need to take a consent from all the allottees. But if there is a major alteration which was not given while during the registration, major alteration, then you have to take 2/3 allottees approval. So you have to take a prior approval of 2/3 allottees before doing any major changes in the project or layout or in any common areas. So this is very important aspect and pain head for every promoter. So they have to very carefully plan before coming into the project. They cannot do anything hanky-panky after registering the project. They have to very planfully, they have to execute this project. Because if you have shown swimming pool as a amenity in the project, and later on if you are changing that amenities, that is not allowed. You have to take 2/3 consent. And if allottees are not interested to give consent, you cannot do anything. Then you have to go with the old plans. So that is this section is very important, and we have seen major of the cases or major of the pain for the promoter comes from the section 14 itself. And the promoter is also responsible for rectifying the section 41 we have covered, 14.2 we have covered, and then this is 14.3. Today only I have hearing on this third wala sections. That promoter is also responsible for rectifying defects within 5 years of the possession. So if you have received the completion, you have given the possession to the allottees, and if there is any structural or if there is any major defects in that project, so you are still liable. After the project delivery also, you are still liable for next 5 years to rectify that structural defect. So failing which, allottees are entitled to compensation under that. And that rectification has to be done within 30 days only. So this 14.3 is also very important aspect. The section 14 is very important. Section 14.1 for minor, for major, you have to take 2/3 allottees consent, and 14.3 is for defects. Please remember, if there is any defect in the project, so that project defect has to be rectified the promoter. If that defect comes in 5 years only. If after 5 years it is coming in the picture, or it has come in the picture before but you have not taken any actions on that, allottees have not taken action after the 5 years they are taking, that will not be allowed by the RERA, because you have not taken anything, you have not we cannot prove it. It has come earlier. 5 years is defect liability, we say defect liability for the promoter. Now coming to the section 15. So section 15 says about transferring the project to third party. If promoter is not willing to, is not interested to, or is not capable to complete that project after registering with the RERA, and he has sold some units also, but due to many reasons, he has some other commitment, he want to transfer that project, or sometime NCLT is also coming into the picture, or many kind of conditions are there where project needs to be transferred to the third party. He cannot do it. So in that case, he has to follow section 15. So section 15 says that the promoter cannot transfer the majority rights and liabilities without consent from 2/3 of the allottees and approval from the authority. Any transfer approved must not affect the allotments made by the previous promoter. So if you are transferring and you have taken the two-third consent also, and you are transferring it, and you cannot change by allotment. You cannot say, now I'm the new promoter. You have given 501. Now I will give 502. It is not possible. You have to adhere to that previous promoter's commitment. And in that checkbox only, you have to complete that project. New promoter has to complete that project. So a new promoter must fulfill all the pending obligation under the Act and agreement with the allottees without extending project completion timelines. He cannot extend. So if sir, I'm new promoter, I want to extend that 3 years. He is not allowed. If that allottee's agreement has been entered and the date has been specified, you have to adhere to that, and you have to be responsible for that date only. You cannot extend it because of your coming as a new promoter. So this is very important aspect of the RERA section 15, very important. Now coming to next section, which is section 18. Section 18 is all about return of amount and compensation in case of non-completion or inability to provide. Very important section where a promoter is not able to complete the project on the given timeline. Suppose he has entered into the agreement with me and he specified that I will complete the project before 31st March 2024. He is not completed. Then in that case, he is liable to return the amount and compensation plus interest is all given under section 18. So once I have not fulfilled that obligation of timeline, I am going to face huge litigation in the RERA, and everyone will be asking for the interest and compensation for me. And if someone asks to return the amount, I have to return that amount with interest and compensation. I cannot say that I will not return that amount. I do this, I do that. This is not possible because section 18 restrict you from doing all these things. So this is very important section for the allottees protection. We can say they are protected under the RERA. Now we'll come for the, we have seen the few key provisions of the RERA, which everyone should know. Now coming into the penalty provisions, we'll see that in short, what are those penalties. That 59 imposes the penalty for non-registration under section 3. So if you are not registered under section 3, you are liable to penalize under section 59. And that fine can be up to 10% of the project cost or imprisonment up to 3 years. We have not seen imprisonment, but we have seen the penalties has been levied for non-registration of the project. In RERA, in some state, or we can say specifically in Maharashtra itself, there were around 1,200 projects which were not registered in under section 3 in timeline. Penalty has been levied ranging from 50,000 to 20 lakhs also. And after that also, many judgments have been there for non-registration of the project. Under section 3, they are liable to pay the penalty. And fine can be up to 10% of the project cost, which is very huge, which is not very small amount. Now, coming to section 60, which deal with the penalties for providing false information. If you have uploaded certain information under section 4 and this information found to be very false, your commencement is not correct, manipulated, or you have manipulated certain documents to take the registration under section 3, and it has come to the light of the RERA that you have provided the false information, then you are liable for 5% of the project cost, estimated cost. So it's a 5% of the estimated cost, section 16 says. Now after that, section 61 is any other provisions which we have not followed. Many, like you have not done comply with section 11 or 4421 LD, and all these provisions are there. Then you are liable for 5% of the project cost. Now section 62 is for the agent. So first 3 provisions for the promoter, 62 is for the agent. It is also saying that you have failed to comply with section 9 and 10. I have not specifically covered section 9 and 10. cover only promoters aspect into this in the seminar. Other it will be very lengthy. But if section real estate agent do not comply with the section 9 or 10, then he may face the penalty of 5% of the project cost. Finally, section 63 is penalize the promoter failing to comply with the authority order. Now, these 3 and 4 were not complying with the section, but 63 is specifically if you are not complying with the orders. So, if orders has been issued and you are not complying, then it will be a daily fines up to 5% of the project cost. It may go from daily fines 5,000, 10,000, 200, 5,000 based on the case to case basis, and it can go up to 5% of the project cost. So I can say an example for a few examples is like uh, promoter has to give a form the society in given timeline after the completion, suppose in 3 months of the completion, and he has not complied with that, and authority has given the order, do it in 1 month, and still he has not done it. So he was liable to pay 1 crore penalty also for that. So this kind of orders will come. Many other orders will come. And if you are not complying with that order, then again you will be liable for not complying with the authority orders. Now we'll go for next part, which is very important part, which is saying I will not explain everything because we are very short of time right now. So I'll cover two important aspects, very important aspects. These are the very important terminology. Yeah? So everyone, before coming into the RERA, you should know this terminology. What is promoter, what is allotee, what is apartment, what is carpet area, what is common area, what is interest planning area, advertisement prospects, thus real estate project and sanction plan. I will cover two important aspects for better understanding and knowing. Is first is promoter area and second is carpet area. What is a promoter under the RERA? Who is the promoter? So a person who constructs or causes to be constructed. A person who constructs or causes to be constructed an independent building or building consisting of apartments. Then for the purpose of what? For the purpose of selling all or any units. So if any person is constructing himself or causes to be constructed in and building or apartment, whatever, for the purpose of selling, he is a promoter. He is liable as a promoter under the RERA Act. So in many cases, we see that promoter projects are JV projects. Landowners are also there. Some are coming in as a area sharing, some as a revenue sharing, and some as other models also. In that case, a promoter is a person who is constructing. A builder is a developer is a promoter. Landowner who is a causes to be constructed. He can be a promoter. Investor who is providing fund to the promoter and want to construct that and sell those units can be a promoter into this. And sometime I have seen one case that a bank has produced themselves has given the loan, but while representation they have represented as they are causes to be constructed and they are liable to be a promoter, and they have to face that penalty also. Bank also has to face the penalty when they are causes to be constructed. So be very careful and understand the definition of the promoter who comes under the promoter's definition. If anyone comes under the promoter definition, then promoter is defined. If there is a real estate project, and if there is a allotee, and if there is selling happening, then promoter has to follow all the RERA norms of this project. Suppose there are multiple people who are the promoter into the same project. There are landowner also, bankers also, anything. Investors also there. Contractor is also there. Major contractor, key contractor, you can say. And those people are there. Who is liable to register? So any person who is a principal, who is who is selling that units, who is taking that all the liabilities and paying for this, is a principal promoter has to register that project, and he has to mention all the other parties as a co-promoter, or we can say as a landowner, investor, whatever it is in that project. So others are also promoter, but project has to be registered singly. Not everyone has to come and register the project into the RERA. Project registration is single, but all these people are promoters. Now, next very important aspect which we are, even the development authority is also promoter. Let me tell you. Next very important aspect which we are going to cover is the carpet areas definition. We have to understand, because the carpet area has been defined and standardized. Now you cannot use any other area. You have to go with the carpet areas definition only. You cannot add any other area into the RERA. You cannot say this. You cannot market any other area. What is carpet area? So carpet area means a net usable floor area of an apartment. Net usable floor area of an apartment. Net usable floor area. Usable floor area. It excludes external walls. It excludes external walls. Internal walls is included, but external walls are excluded. It excludes area under service shafts, exclusive balcony, veranda, or we can say open terrace area. These all things are excluded. Only included is what? Internal wall, internal partition wall. Whatever is internal wall we have, partition which is dividing that flats, or we can say rooms, or whatever it is included. But external wall of that unit is not included. So it's a net usable floor area. This is a very standardized, simplified definition of carpet area, and you have to go with that area. Why we have to understand this carpet area definition? Because while issuing the certificate, we have to mention carpet area compulsory. So we need to understand ourselves what should be the carpet area, because the promoter is always willing to expand those definition, bring more area into the carpet area, and then further things happens. So that's why a chartered accountant has to be very due diligent while doing that carpet area, while mentioning that carpet area in that certificates. So this is very important definition. That's why I have covered this aspect. Others are common areas. We can say common area. Whatever the common area is there, like parking and all these things, are common area into this. Now we'll go for next in aspect. I will not conclude it. Before concluding, I would like to say what are the opportunities for the CA in RERA. What are the opportunities we do have in the RERA? So if you see that in my session, we can do a registration work, we can do an audit, we can provide audit and assurance services, we can do a compliance advisory, we can help with the financial due diligence, which I mentioned. Financial due diligence, if your project is not feasible and still you are taking that liability and doing that project, then you are going to stuck with the delivery timeline, and then more problems will be there. So that's why whenever the project is to be planned, as a chartered accountant, we should be a financial due diligence for that project. We should advise the client. We should, in fact, guide the client to tell them that a financial due diligence should be done before taking that project into aspect. Obviously, we are chartered accountant, so everyone expect from us that we should do taxation and structuring. This is the additional opportunity we have in the RERA practice. Then we can have internal controls and risk management advisory. We can also provide a litigation support. Litigations, many times RERA litigation is there. We, as a chartered accountant under section 56, allowed to represent before the authorities and tribunal. So we have that advantage ourselves to do a litigation work. And in this part, I would like to give more this why a chartered accountant is very good in representing matter in authority and tribunal, because we as a chartered accountant see very clear picture of the project, very clear picture. So we have holistic idea of the project, apart from other professionals. And we can, if we have a little bit of touch of legals background or lawyers background or drafting background, we can say, we can give a very good litigation support. I have myself able to give many represent many cases, and it is very easy and simple for us to do. But yes, we need a little bit touch up on the drafting background and representation background. We can give a litigation support to the client, technology solutions in the sense that sometimes all alignment of this project needs a technological support. How the information should be collected, how process should be happen. So here also we can provide a solution to the clients. If we know real estate technologies, good technology, there are many promoters who need our guidance, support. Use this kind of technology, use this kind of software for CRM, or we can say for RERA compliances, for accounting and all these things. So this is also we can provide to the client. Now, how to come into the RERA practice? If you want to do the RERA practice, what are the important things you should be knowing before coming into the RERA practice? Is first to understand the RERA law. Should understand the RERA law. Should read the RERA law. Not only act. In fact, rules should be also should also look into the rules also. We should also look into the circulars also in your respective states. And what are the processes followed in each states, in your states? What are the processes followed? How they are implemented? How they are regulated? If you know this aspect of the RERA, you can easily do the RERA practice. You have to develop the expertise. So if you have decided to do RERA practice, then you have to start working on that expertise part of advisory part of yourself. Then do collaboration, obviously, with the RERA experts who are there in the RERA field. You can do collaboration with them. They can assist you in many part, in litigation part, in compliance part, or in all the parts. So you have to do collaboration with the RERA experts. Build a network with the promoter, build a network of the expert advisors, lawyers, legals, all this we have to build a network. Understand the real estate. If you are a RERA expert and you are not knowing anything about the real estate sector, how it operates, how it works, how the customers are coming, how the customers are going, how the project is delivered, how the authorities are sanctioning. If you're not understanding this kind of aspect of the real estate, you cannot understand how the RERA to be done, how to be a RERA expert. Then knowledge of plans, because whenever you are issuing the certificates or whenever you are giving any kind of advisory, you should understand the plans also, technicalities of the plans. So you need that little bit touch of the understanding technical plans like architect little bit. Not I'm saying you should go in a planning authority and do sanctioning of that project, and then only you will understand the RERA. It is not required that, but you should be able to interpret the plans and other documents. Get acquainted with the legal aspects. Obviously, we have to acquaint with ourselves with the legal aspects of the RERA. So, what kind of real estate rules are there in your regions? How lands are transferred? How what kind of agreements are done, and what kind of means all this legal aspect we have to understand. If we understand that legal aspect, we can clearly see the real estate project in a clear view, and we can advise the client how it is going to be. Then understand compliance requirement, which I have already explained that what compliance requirement is as per the act is required. Yes, you have to understand in state what in their your state compliance requirements are there. Then offer value-added services and keep learning. That is my advice to all of you, that you should keep learning this part. You should be always be learning in real estate sector. Real estate sector is most complicated sector. It's provide ample opportunity for a chartered accountant, and it has many I've seen many things will come out of real estate sector. So because of complications of things, you will get many other opportunities also out of this, apart from RERA also. So you have to be very in touch with the real estate sector. So in RERA only I can represent allottees also. I represent association of allottees. I represent promoters. I represent authorities also sometimes. So we have represent builders association, real estate agent association, many kind of things we can do in RERA. And apart from RERA also, we can enter into other zone also. If we have a good team with us, of like we have a team of engineers and architect and all this team, we can also help in further services also. Like myself has done that stall project was there. So we have provided a project management consultancy also, which was not related to RERA, but as a real estate sector, I was there. I have added that value-added services to the client. So this is what I can say is for available for you all guys on the table, and you can do all these kind of works in RERA after in RERA. So conclusion, coming to the conclusion, I would like to conclude it because time is also done with time. We have to give time to question answer also. So what transformation real estate RERA has transformed the real estate governance as empowering the consumers, facilitating the growth. We see the huge growth is there. Investor confidence is also there, booster. So encourage adherence to RERA guidelines to promoter, ask them to follow the guidelines, promote transparency. It promote transparency, fair practice, and consumer rights. So I would like to conclude and we'll go for the question answer. Yes.
Sure. That was indeed a very detailed and right from the basics till the pathway for the members for the practice. We do have quite a lot of questions, and I really am happy that members were uh, glued to the session because they have queries right from the very first slide that you started to the last one. So I'll be taking up as much as are relevant. Can RERA empowered to sell flats which are attached by him but by mortgaged by bank? So I am not able to understand what Mr. Girish Agrawal wanted to ask.
I can answer that query. I understand little bit. He wants to say, he wants to tell that can mortgage property is there. If I am correct or not, if a project is mortgaged somewhere and it has been stalled, what I say is, and can association of allottees come into the picture and complete that project and sell that remaining? If you are saying that, so there was ambiguity in that, but Supreme Court has given that you can RERA association can do that because the RERA Act is in itself is a specific act which is related to real estate only. So it has more power.
Okay.
Association can.
Then CA Ashok M ask, is the percentage of completion method applicable to a real estate builder, a partnership firm which entered into JDA with a landowner for construction of lands?
It is applicable. Everyone is, for all the project, it is applicable.
Yes.
There is no such exemption if you enter into JV project, so you are not liable to do percentage. You have to follow that rule, completion wala.
Okay. Then Mr. Priyakant Shah asks, what is the provision in RERA for payment made to the developer before RERA final certificate is obtained to start the construction? Can person get back his fund with or without interest?
Yeah, he can get back his fund with or without interest under Section 18. But if you see that Section 18 says mostly if the project is delayed, but now we have seen that RERA is given judgment also that if they want their refund of money, they can take that money subject to the terms and condition of the agreement. You can take that.
Okay. Then That's a normal question, nothing related to the RERA, but one of the member wants to know, Ms. Jyoti Gupta, that in case of delayed project, consumers are going to the consumer court also instead of going and seeking remedy from RERA. So why are they going to consumer courts?
They can go because it is allowed under the act. They can go to consumer court also and RERA court also. Because RERA, if you say, is a state level authorities, and court himself is working as a court, so they are very pure process oriented, court oriented processes, we can say. So their judgment are more reliable and more long. And consumer court is for the consumer only. RERA is for both. The promoter also can go into the RERA and consumer can also go. They have to balance it. RERA has to balance it.
Okay. Then Mr. Hemant Kumar from Bangalore was, when he's experiencing, sharing his own experience that the RERA authorities at Bangalore have stopped working for quite a long time. As in more than 50 cases they have filed, but there is no compliance. So is there any remedy what they can offer to their clients?
You can, if this kind of things is happening, you can file a case only in the RERA, that RERA authorities give the powers given in the RERA, that functioning is not happening properly. You can, I can say a section is there, section 38 or something is there, where you can file the case against the authority only if they are not functioning properly.
All right, all right. So meanwhile, the consumers can go to the consumer court to seek relief, and against the RERA authorities, you can file the complaint with the RERA higher ups, right?
If they are not performing properly, you can make them do for that.
Okay, okay, okay. Then basically, one member, that is Narayan Kumar, N. Kumar, wanted to know in the JDA, landowner will also be considered as a promoter or not, which I think you have very well addressed.
Yeah, we have already addressed into this definition only. Landowner is also a promoter.
Yes, yes. Then Ms. Disha wanted to know, if plot gets cancelled, is there any time limit to return the money by the promoter? In case of plot sale, we're not talking about apartment, but plot sale. So in the plot registration.
If you are registered with that, if you have the registered agreement, and that is to be cancelled, and it is cancelled, then you have to follow that agreement terms and condition, when and how the money should be returned. Money should be returned.
As in there is no such defined period, but as much as in however is defined in the agreement to sell or likewise you will have to follow that time.
If it is not there, then generally 30 days is more than enough to do that.
Acha. Unless and otherwise specified, as such, is there anything specified in the law as in for the RERA?
Not specified in the law, immediate how timeline should be, but it should be 30.
A reasonability term has to be applied there. Okay. Then, okay. Parth Kamal Sen wanted to know, can the deed of conveyance be executed without occupancy certificate and completion certificate?
No, it is not possible. That without taking completion certificate and occupancy certificate, you cannot execute a deed of conveyance. In fact, you cannot form the society also. So there is no question of deed of conveyance.
Then Krinjal Shingvi wanted to know, how much is the standard charge for Form 3 and Form 5? I think it is the individual assessment as to how much you want to charge for your professional services that you are extending.
But I will say that don't charge so low that you cannot provide the services at proper, because what I want to say is this is very specialized service, and you will not get a staff also at very low cost, and people also to provide. So you can charge little bit higher. Don't drop the market.
True. Actually, don't drop the market. That is very important. Okay. CA Bhavagrahi Nayak wants to know if any project is not completed as on the date as had been applied, but issued completion certificate in VOC. Do RERA apply to such projects?
Yeah, this is very important provision which actually I forgot to add it. Section 7 and Section 8. Section 7
Okay.
says if the project is not completed in time, the project has to be revoked, registration has to be revoked. And if registration is revoked, Section 8 comes into the place where the project, if section registration is revoked, state authority has to appoint someone to take over that project, and first right of refusal is given to the association authority who can, if they want to complete that project, they can take that project from the promoter with all everything.
Okay. Okay. So what is the timeline for lodging a complaint against the builder if the project is not completed in time?
You should file immediately. If you should file in advance if you feel that project is not completed
Delayed.
40%
It's getting
only.
delayed.
If it is completed 40%, your deadline is very near. You see that it is not going to complete. You should take action immediately.
But is there any cutoff date, as in, beyond these many days, you cannot file the complaint? Is there any such cutoff date?
No. If that deadline is over, the project you can file the case immediately. Even before you can file the case also. No problem.
Okay. Okay.
There is no deadline. You have to wait for 12 months, then only you will file. You take proactive action on that.
Okay. Okay. Then
We have filed 1
how
year
to
before.
treat GST and TDS while calculating 70% amount?
GST and TDS has to be excluded. These are all pass-through
Okay.
charges. Stamp duty has to be excluded. Should not be considered. And those amounts should be deposited in 30% only, not in 70%. If you
70%.
if you bring this amount into 70%, then you have to again you have to provide that certificate to withdraw that amount also.
True. True. One of the member has a very practical query. It says, technically, which is prepared first, architect certificate, engineer certificate, or a chartered accountant certificate?
Technique has been given in the RERA Act only. First has to be engineer, because engineer is always connected with the project. And he is always coming and going in the project. Architect usually goes there. So second part comes with the architect, and then last comes for the chartered accountant. So engineer, architect, and chartered accountant.
Okay. Then defect liability after 5 years would be rectified by association of allottees. I guess that's right, because up to 5 years, defect liability lies with the developer, right?
Developer, promoter. Yeah.
Right,
After that,
right.
it's your liability.
Okay. In case promoter failed to deliver flat in time due to regulatory issues, and promoter had to incur additional cost later, is he entitled to recover any additional cost from the allottees before granting actual possession?
So again, that price escalation clause has to be there in the agreement. It is there
Agreement also.
in the agreement, because sometimes it happens some prices are rising like anything in given period of time. Labor's prices are. So obviously we cannot estimate those things. Promoter cannot estimate. So if price escalation clause is there, you can go with the agreement clauses and you can increase.
Okay.
Again.
Then Mr. Anirudh Agrawal wants to know, is there any case law supporting Section 18 to return the amount? Promoter has obtained extension of registration. However, agreement to sell is not revised. No possession given and date given in agreement for sale has also expired.
So agreement, if you Section 8, if you refer it now, they are not saying what is date given into the registration. They are only saying whatever date is given in the agreement is a date committed to you. That agreement date, if it is exceeded, then he is liable to pay the interest. So you don't have to see whether that he has taken extension or not taken extension. What date is in the RERA. We are not concerned with that thing. We are concerned with the date specified in the agreement.
Okay. One of the member is asking difference between FSI and joint development agreement. I mean, I did not get that.
difference between FSI and joint development agreement. FSI is nothing to do with the joint development agreement.
Exactly.
Joint development agreement is done between promoter and where the landowner is there, and
Right.
FSI to do with the land and that
Area.
local. If local authority specify or give some FSI, now some development authority has given okay, this much FSI is allowed on this land, this
Right.
many area of land, you can develop that much FSI. You can use that
Right.
to develop the project.
Then, are there any definitions given for minor alterations and major alterations in section 14?
No, there is no definition given, but you can refer the case laws. Some case laws are there which is defined
Okay.
minor iteration and what is major. In some
So this
state,
is more of subjective and theory of relativity to be applied.
more of subjective. These are case to
Okay.
case dependent.
Okay. Then in case of revenue sharing model under joint development agreement, how should the land value be reflected in Form 3?
This is very means nowhere in the act it has mentioned what is area sharing and what is revenue sharing. No clarification is given. They have only said in cost. So here your state laws comes into the process. If your state rules, you find it, or if your circular is there or notification is there, then you have to follow that notification rules, whatever it is. Act, there is nothing given for area sharing and for revenue sharing. But I will suggest in revenue sharing cases, some states are not allowing it, some states are allowing it. So you have to estimate how much revenue has to be given to the landowner, and based on that, how much you are giving, you have to show it as an income.
Okay. Will the possession of the flat be given pending occupancy certificate and completion certificate?
What question is there?
Whether possession be given
No,
pending occupancy certificate or completion certificate.
no, you cannot give. Again, it is a state part, but most of the states don't allow it. You cannot give the possession before taking completion or occupancy certificate. If you understand that the process, what it is, occupancy certificate process or completion certificate process, then definitely will not take the possession before that.
Yeah.
You should not take
Okay.
it. If you take it, you lose all the rights.
Okay. Then a question is, what happens if the engineer, architect, and C are related? Is it allowed by the law, or there are any barring on it that the three cannot be related? As in related party transactions, जैसे Company Act में है, that needs to be disclosed. Is there any disclosure norm required?
Even though they are relative, but they are governed by independent act. So
Yes.
architect has to not see that my brother is chartered accountant, so I should follow the chartered accountant rule. You have to follow their own act, their own regulation is there, their own authorities are there. So there is nothing in the act which prohibit that they should not be related. They can be related. No problem.
Okay. Last few questions, sir. I hope you're
Yeah.
okay with it.
Yes.
Okay. Whether parking allotment has to be updated in RERA returns? If so, in which form?
So parking allotment, there is no, I can say is in the act it is not given. You have to specify how the allotment, but
For updation, huh?
for updations, yes.
Yes.
But but rules and regulations state-wise are providing that you have to update that parking, how much parking are booked, what parking is still available. So you have to do that as per the states. It's a state subject again.
Okay. Okay. Then, if in case if a company opts for deregistration of a project on May 24 and Maharera notifies the said project on May 25, whether the compliances are required to be made during the period of 1 year. If yes, whether the costs are required to be changed or accumulated on a quarterly basis where no activity is carried out in a project.
Yeah. So why we go for the deregistration? We have to understand again that a deregistration, if we have applied for the deregistration, means we are not continuing with the project.
Yes.
We are not continuing with the project, or we don't want to. Second aspect can be we don't want to sell anything out of that. We will sell it after the completion. So we are deregistration. So if we are not continuing with the project, so the day we are applying for that deregistration, we are not required to do any compliance after the deregistration application.
Okay.
Even though it is approved or not, because deregistration process is very lengthy in Maharashtra. That's issue is there.
Okay. Then next question is from Delhi. For lodging claim for compensation under RERA, how limitation law will apply specifically where DRT ordered first bank to recover from flat sale and then from company and thereafter from borrower? If recovery is now proceeded against borrower if banker failed to explore first two options, possession of flat not delivered.
So
एकदम
this
worst case scenario आ गया.
ये वर्स्ट केस सिनेरियो है जिधर प्रोजेक्ट डिलीवरी फेल हो गया है, बैंक लोन रिपेमेंट फेल हो गया है, and bank has also given the loan, so it's also party into the this all resolution process. So earlier there was ambiguity, but Supreme Court has come with the judgment of Surface Act, where rights of the allottees are first considered. They will be given the possession is first considered over there. If you go over the right of allottees also consider while doing resolution process.
Okay. Okay.
Since RERA is a
Okay.
very specific act.
Yeah. Okay. Next question is, in case of redevelopment, when the society as the owner of property land is also considered promoter, this won't be covered under, and then this will come under the exclusions that you had said, right?
Yeah. It is exempted if there is no new sale is coming.
If no new sale is coming, if during the redevelopment there are new units being constructed and allotted, then it should be covered under RERA as far as it comes under the inclusion.
Yeah.
Okay. Okay.
Again that इसके पहले वाला क्वेश्चन जो था ना इंसॉल्वेंसी वाला, उसमें इंसॉल्वेंसी surpasses the RERA Act. That you have to remember that.
Okay. Okay.
So process is under insolvency, na RERA will not enter in that cases.
Acha. Okay. Okay. Then, once a project gets deregistered by RERA, whether the allottees or any external party may sought to go for an appeal under RERA or they have to seek for an alternate remedy.
So it depends why, because deregistration has been happened for certain terms, and if they are excluded from this and they have not done, they can file the case against promoter in the RERA.
Acha, as in after deregistration also, because that was once.
Many times the promoter says, I have not registered any units, and he go for the project. Now RERA authority is not knowing whether he has registered or not registered. And allottee comes to know after that deregistration has already been done. In that case, some promoter has given false information.
Right. Okay. Second, then can investor in the project file a complaint against the builder if there is delay in construction by the builder?
Illegal construction by the builder.
No. If there is a delay in construction, can the investor for the project file a complaint against builder?
There is no issue with that. Even if the investor is there, he is defined as a promoter into definition. But we have seen the judgment where investor is treated as a allottee only, subject to he is being allotted flats. If he has been allottee, he falls into allottee definition, or he is himself an allottee also, so he can file the case, even if he is an investor.
Okay. Then, as execution of RERA order, if RERA sees the flats, can RERA sell them? If yes, how?
RERA is an only authority. They cannot sell it. They can give authority to someone to do all this part. They can allow.
So, but can they seize per se?
Seize means they can seize any flats. Flats or unsold flats.
That they did not mention, but as in, do they have the authority to seize the flats? Then let us come to sold or unsold flats.
I don't think so. They can seize any flats. They can they can send it to the power. The power is given to some other authority. They can refer it to some those authority to do all this part. They
Yes.
themselves.
Okay. Okay. The member from Rajasthan says, basically that member has quite a lot queries and he has asked for your personal mail ID, Girish Agrawal. He wants to know how he can reach out to you because he's got quite a lot queries and it seems quite serious also because the builder has run away after 14 FIRs and even after 7 years he has not got any remedy. So probably he would want to seek your personal advice. So if you can just share your.
Yeah, I will share.
And many of the members are asking for the PPT as well, sir.
Yeah, I will share PPT also. You can refer my email ID.
Yeah.
You can see that screen.
That's all for the queries that we had with us. More than 40 queries were there, but we just filtered out similar questions were not repeated here. But I think it was a wonderful, wonderful presentation from your end because it is usually said that, if you don't have query, that means either you were not heard or the presentation was very nice. And when you have queries, that means the presentation was so nice that people had things to think upon and then, the questions prop up. And as much as I can see that, you started on a very basic, simple note that has how who all are eligible, as in who all are required to get registered themselves under RERA, what are the remedies available for the consumers as well as the investors. So all in all, it was a complete package giving, both the sides very clearly and having so many queries, you answered them so well, so calmly. It was indeed an honor to have you here on this platform, sir. And looking forward to have much more interactions with you over this forum and over, the personal email that you have given so that we can reach out to you and have our queries resolved. Thank you very much for being with us. And of course, a big, big, big thank you to all the members who have joined. More than 300 members were there today. And most importantly, the committee which gave us this platform to interact with all of us. So thank you very much. And with this, I propose that the session is over. Jai Hind and take care.
Thank you so much.
Yeah.